There are certain things that professional traders do before every single trade that they take. They develop routines, and those routines are what enable them to perform consistently over time. Today, I want to discuss one of those things that I do before every trade that I plan. Hi, my name is Steve Spencer. I'm a partner at SMB Capital. We are a proprietary trading firm in New York City where we trade stocks and options. So let's take a look at the first slide that I'm sharing with you today, which gives us a big picture of one of the main market indexes through the Qs, the ETF. That's the NASDAQ 100, mainly focused on technology. Last week on October 11th, you can see I posted this before the market opened. We had rallied back strongly over the prior 4 days or so, and we were coming back into potentially a resistance area. And so my point of posting this before the market opened was, well, now that we had run up quite a bit over the prior few days, we're coming into an area where I was prepared to look for the market to set up on the short side. And I wanted to give you that context before we got into the particular setup and routine that we're going to talk about today. The next post that we're looking at here is from a couple of days later. Notice that we're an intraday view, and I posted this because I wanted to highlight that the market was looking quite strong. In the morning, it was down around 371, the Qs were, and it ran up a couple of dollars and it failed, but buyers kept on stepping up and it kept on pressing up against the morning resistance. And it looked like perhaps my idea for being short the market for a pullback was not going to work out. But around the middle of the day, right after lunch, after 1 p.m., there was a very hard down move through the morning support and through the morning low. And that was when I said, okay, here's a signal. And now I'm going to look for the market to have a deeper pullback, whether it's this afternoon or the next day. That was the signal that I wanted to see. This is also what got me thinking about the next slide we're going to look at, and why I posted this the next morning before the market opened was the prior day was quite difficult. As I had mentioned in the first post, earlier in the week, between the 371, 372 area, I was looking for the Qs to top out and have some sort of pullback to the mid 360s, and it just wasn't cooperating for a couple of days. Not until that rug pull around 130, where it dropped very quickly a couple of dollars. And now the post that we're looking at right now, you can actually see that right in the middle, that very quick rug pull, where it goes from above that horizontal blue line to below it, and then all the way down to the horizontal support, which is around 368, 368 and a half or so. And so when we came in the next morning, and what we discussed in our morning meeting was, okay, we have this signal, we had some selling finally come in, hard down move, but what we need to see to have a larger pullback is a lower high and then a lower low. And so how do we think about this? And what I shared on this post was 3 potential scenarios of what might happen that day. 1, we might just go straight down, take out the pre-market support, go down into the mid 360s. Number 2, we might go up to the prior day's resistance, all the way up to the kind of the highs where we had sold off from at 1 o'clock. Or 3, and I was hoping that 3 would actually be the setup that would work out, which is we would pop on the open from the pre-market support up about $2.50 or so to where we broke down the prior day, to the prior morning support. And this is what we kind of discussed in our AM meeting before the market opened, which was if we pop back up into that 371.20 area, which had been the morning support the prior day, and there was some selling and we started to roll over, perhaps we would then walk into a pretty nice pullback into the mid 360s. And so I shared this post because what I want to do before I prepare for any type of trade is like, what are the possible patterns that it might look like? And the reason why this is so important, and any trader with any type of experience will know, is if they have an idea to be short the market or they have an idea to be long the market, quite often it doesn't behave well. And I shared this because the day before, I was still thinking the same thing. Okay, look, let's look for, I'd like to be short the market. And on the open, it ripped up to the highs. It came off, double topped out there, and started to come off. So I got short, and then I went into a bunch of meetings, and I put in a stop above the morning high. By the time I came back to the desk, I'd been stopped out right here in this little wick, which is, that happens. Obviously, if I was on the desk when that happened, I could have easily re-entered right here and perhaps caught the down move. But then again, it came back up again. And I came back to the desk. I saw that I'd been stopped out. I missed this pullback here of about $1, but we were right back up here. So I put the position back on, went into some more meetings. I came back to the desk again. I had been stopped out again here. And then later in the day, I was actually here when this happened, when we had the hard down move to like 372.50, and I was on the desk, so I shorted it again, and then finally was in it for this hard down move to the morning low. But my frustration level was high because I thought I had a good position. The market had come all the way back up to an area where I thought there was a good chance, like the low 370s here, where it could fail, pull back to 365 or something like that, and we'd see if bids would come in again, and perhaps this would be the beginning of a test of where we sold off from in mid-September, where we had topped out at like that 376, 378 area. I'm hoping that this idea, for some of you who haven't done this before, is putting these paths out there and understand that the trade might not work right away. And you want to think about the different ways that the trade could work. It could take out pre-market support. You could put on the trade there as momentum with a stop above pre-market support. It might pop up right on the open to the prior day's high. And there, if it fails there and comes off and starts holding lower, you'd put on the trade there. But the most likely path, number 3, which was after we saw the weakness the prior day, was a quick pop up to the morning support, which becomes resistance. And why does the prior morning support become resistance? Anytime a stock or a market comes off pretty hard and then retraces to an area where had been prior support, the reason why quite often it will fail, and here's a chart of what actually it did. In the pre-market, we can see it supported at 368. And then it popped up into about 370.50 when the market opened. It went right to that 371.20 level I mentioned earlier. It came off to below 370. Once that happened, I was putting up all of my offers, 371, 371.10, 371.20 into the opening high, and looking for that failure at that level. And the reason why things will fail like this did right at the prior morning's support is people are getting long at that level. And the next day, when it comes off hard in the afternoon, many people will buy at a level thinking the markets continue higher, and they get caught in a pullback and they don't get out. And those people are very likely the next day, when it comes back up to that price where they were buying the prior morning, is to start selling. And that creates supply. It stalls out the price action, and then people who are looking to get short, such as myself, will get short. And then if more people pile in and start selling and you start to get weakness, all of a sudden the momentum takes over to the downside. And so it was up into the prior morning support. It was down through the pre-market support, and then we had a consolidation. And this was kind of your first area right here that I've circled, where you could then look for a move down to kind of the level that I highlighted in the post on Twitter in the pre-market, which was, kind of going down into the 365 area. Anytime, once the sellers take control here, by the way, and there's a consolidation and has a second down leg, what I'm looking for once it hits my target here, and I'm completely flat, actually getting long into this area here, but this is my target, is what I'll do is I'm perfectly happy to then short again into the prior consolidation area. And I should also point out, a way to play this not only is trading this, but when it opens up here above 370 and gets to your upside area, you can buy 368 puts for a couple of days out, usually a couple of days out. And if it comes back down into this 368 area, you can actually start getting long some stock against your puts. If you bought, let's say, 10 contracts, which is equivalent of 1,000 shares, you could buy a few hundred shares against those contracts. And if it keeps on going, you'll make plenty of money as it continues to go down to your target area in the mid 360s. But at the same time, if it stops at this pre-market support and bounces that small long position in the stock, since this is happening in the morning, that'll cover the cost of the puts that you bought on the open here. And if it bounces back up to like 370, you can sell the stock, and then maybe, it rolls over later in the day. But what really kept me focused on the trade and made sure that I got in was I outlined those paths. And so I didn't need to see a move to the prior day's high. I didn't need to wait to see a move below the pre-market support. I had this level based on the prior morning support and was able to allow me to be more aggressive in this setup as opposed to waiting for one particular scenario. Anyway, I hope you employ this technique in your own trading. I hope it lowers your frustration level, hope to make you more consistent, and good luck.
So you're an active trader, not doing as well as you want, not doing as well as you deserve. and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of SMB Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part, you don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.